Hi, I'm Mark Satov. Thrilled to be here today with my old friend and business associate Mike Murray. Mike is in the midst of starting a very exciting new private equity fund, so we wanted to get him in to talk about that, and let's get right into it.
My partner, Steve Ferroni, and I, Steve and I worked together for a long time at Teachers, about 13 years actually, worked really closely together, and we struck out on our own, the firm's called Peloton Capital Management, as I mentioned. We're just getting started. We're kind of officially launching in about a week, and then we're going to start our fundraising after that.
You know, there are lots of private equity funds out there, a fair number of mid-market private equity funds, more in the US than in Canada, but I guess it's a bit of a blended market for certain deals. So what's the thing that's going to make you a little bit different or differentiated in the fund world?
Look, I think the major thrust of what we're trying to do is we're trying to launch a longer dated middle market fund. And when I say longer dated, I mean there's really two aspects to that. One is we want to try and raise a 15-year fund rather than the traditional 10-year fund. But we want to marry that with a strategy that is about investing in companies for the long run. So our strategy is to go to the market and say, look, we're different. We have longer term capital. We have an investment strategy that matches it, and we're looking for situations like those where we can really partner with those management teams, entrepreneurs, families, owners to execute on that strategy.
One of the things we see a lot in the market today when our clients are calling us is they are anxious because they are bidding on an asset, they're spending, when they're talking to us, they're thinking about spending diligence dollars on deals that they don't know if they're going to get over the line. And so how does the longer term hold specifically get you to be in a better position to get a deal over the line?
I think, the reality is there aren't many other funds that we've been able to find that have a long-term approach, the one we're trying to describe. So for the right situation, I think it can be a significant point of differentiation. I'm not sure it gets us deals cheaper or even on a proprietary basis. The kinds of sellers I think that this really works well for are entrepreneurs, founders who are looking for a capital partner to help grow the business, and they're nervous about what does this thing look like 5 years from now? How does this sponsor behave?
When it comes time to getting a seller to want to go with you, this is more of a tiebreaker as opposed to something that financially changes your ability to bid more because you think you have longer time to get value creation.
Look, I know. Look, I think it's naive to think that we're going to get things cheaper.
Right.
And I also don't think that this necessarily affords us the opportunity to pay a higher price.
Right.
All else equal. I do think as I mentioned, our sector strategy allows us to, I think, have a differentiated view on a business, hopefully more knowledgeable, hopefully able to come to the table with more a view on value creation. And look, the idea here is the success or failure of these investments will depend on how we're able to grow EBITDA. This is not about, timing the market or multiple arbitrage or timing an exit.
I guess those days are kind of gone given the competitive intensity out there.
But I think having a longer time horizon over which to execute a value creation strategy provides less emphasis on the multiples that you come in and out at.
So we do business with funds in Canada and in the US, and it seems to be that regardless of where the fund is, they're buying assets all over. But I'm just wondering what you see, what are the trends, what are the risks in Canada today?
I think it's a really exciting time in Canada right now, in Toronto in particular. Our observation is that the talent pool here is actually incredibly strong, very deep. The reality is, historically, I think Canadian PE has been somewhat underpenetrated relative to Canada. There's probably fewer firms here than there need to be relative to the size of the market. But there's some interesting stuff going on today with the Canada Business Growth Fund starting up, the Infrastructure Bank. There's a lot of interesting activity, and I think we're excited to be coming out as well. I think we're one of the few new funds that have formed in the buyout space in Canada for a number of years.
Right.
So
I think tend to see the same names kind of Fund 4 and Fund 5, et cetera. Yeah. This is a whole new thing.
Yeah, and I think particularly in the middle market where some of the funds who traditionally participated in that sort of less than $1 billion fund size have had great success and have migrated up now to kind of the $1 billion plus. And so it's left an interesting kind of white space for Canadian funds in that kind of $400 to $600 million range, which is not surprisingly where we're planning on setting ourselves up. So I think, as I said, I think overall it's an exciting time. The pension plans have done incredible things over the years, and excited to see some new activity and some new things coming together, including Peloton Capital Management.
Well, it sounds very exciting. I wish you the best of luck, and I can't wait to be doing business with you in your new fund.
Of course.
All the best.
Thanks, Mark.